Firstly, it's Rua, not Rua, not Ruha, Rua. I've mentioned Rua Bioscience in my previous video, card in the corner if you haven't seen it yet. I received this email from Sharesies telling me that Rua Bioscience were heading to the market, so now is a timely manner for me to discuss everything IPOs. What are they? How do they work? In today's video, we're going to do just that, a beginner's guide to IPOs, if you will. How you can make a small fortune from becoming a first owner of a brand new listed company. Do me a favor, make sure you tune into the entire video, as at the end I'll discuss in more detail about Rua Bioscience and whether or not they are a company you might want to consider to invest in. An initial public offering, or IPO, refers to the process of offering shares of a private corporation to the public in a new stock issuance. Public share issuance allows a company to raise capital from public investors. So why IPOs? Initial public offerings can be used to raise new capital for companies to monetize the investments of private shareholders such as company founders or private equity investors, and to enable easy trading of existing holdings or future capital raising by becoming publicly traded. And how does it work? Before a company releases shares to the stock market, they are considered a private company. During this time, a private company typically has less shareholders, directors, and a small number of staff. The benefits of staying private is the more control over future growth, time to make changes can happen quickly, and less compliance requirements compared to publicly traded companies. A company will then reach a stage in their growth to expand and achieve goals faster, as capital may be limited. A private company will float the idea of going public with a few private and public investors. If the company receives a positive response, they will release an IPO and value their company accordingly. With private and public investors, the chance to own part of their company at an introductory price. Finally, they announce a day they go public and begin trading on the share market. So now we have all collectively increased our financial literacy, or IQ, with the new understanding of IPOs. Let's use this newfound knowledge to find out a little bit more about Rua Bioscience and understand what's going on here. First, who are they? Founded in 2016 by Panapa Iho and Manu Kari, a company now expanded to include specialist engineers, biochemists, and scientists. Originally Hikurangi Cannabis, our mission was and still remains to explore the potential of the emerging cannabis industry to enhance health, heal our lands, and restore prosperity to the indigenous communities we're a part of. A kaupapa I can get on board with. Over the last few years, Rua Bioscience have spent more time with research and development, gaining interest both locally and abroad. And quickly, I really like their seed to sale graphic at the bottom, giving the consumer an inside look to their craft. Now we can add Rua Bioscience's tikanga and add it to our kite. Let's learn a little bit more about their IPO. So, details of the IPO. Seeking up to $20 million through an initial public offering, or IPO. 40 million shares are available at 50 cents per share, a market cap of 70 million. Now they also mention that management won't change for at least 11 months. Some keywords I take out of it are to heal the people and the land, built a resilient, sustainable, fully integrated business, achieved milestones including securing a binding sales agreement with Nimbus Health, one of Germany's top distributors of medicinal cannabis, requires funding to support the company into commercialization, first material sales through wholesale exports. They have large assets, $6 million in 2 state-of-the-art facilities that are now licensed and operational in Ruatoria. We have an 8,000 square meter cultivation centre and a purpose-built extraction and manufacturing facility in Gisborne. Another key takeaway is the PDF states loss-making for 2 years, which is common for even American and Canadian cannabis companies, which have reported losses for almost 4 years, which is a strategy to continue to exceed growth expectations. Revenue is increasing, but reporting operating losses. The final points on Rua Bioscience I wanted to cover off is their standpoint on the referendum. They say here, whilst recreational production is not on the cards, they're an ethical operational company and support the legalization of cannabis because it is the right thing to do. Data shown in the link in the description will tell you more compelling arguments to back up their statement. It's also important to consider the cannabis industry. If we look at Colorado in isolation, here's the Colorado cannabis consumer profile with total revenues at about 7.8 billion in the last 5 years. Colorado's population is very similar to that of New Zealand. And then you need to consider medicinal versus recreational use and local versus international. Although you may not think it, there is a lot of money in medicinal use, and also the contract that they have with the German company provides them with that international exposure compared to just looking after medicinal or possibly recreational use here in Aotearoa. So what did you think from today's video? Any comments, any questions, leave them in the section below. Smash the like button, hit subscribe and click the little notifications if you want more content from me. And maybe these other videos or maybe these other companies you want me to look at. Let me know and I'll be sure to possibly add it into my next video. I'll leave you with that, whānau. Take care.